Hello, everybody. How are we today? Merry Christmas! Merry Christmas to every single one and all of you, regardless if you're somebody that celebrates Christmas or not. It is a time for happiness and it's a time for family and friends and whatnot, and also time for everybody to come and watch me fly solo. How is everybody today? In the background, we've got Remy. Remy is our producer. Thank you very much, Remy, for being here today. Thank you very much for presenting everything, putting everything up on the live stream for us. Welcome, everybody. My apologies. I have a little thing in my throat at the moment. I've got myself some nice ginger lemon drink. I can't call this anything other than that. It's a ginger lemon drink, just to kind of soothe my throat a little bit. Before I do anything else, let me say hello to everybody that is in chat on this 25th of December, Christmas Day. First and foremost, we have Anwar. I'm really sorry if I'm absolutely destroying your name, mate. I'm really sorry. First, morning, everyone. Good morning. Thank you very much for being here. Imam, Merry Christmas, everybody. Merry Christmas to you as well, my friend. We've got James Arcade. Merry Christmas, everybody. Good day, James. Merry Christmas for you as well. We've got Gold Trader X saying hello, hello, Gold Trader X. We have Jamie. Hello from Spain. Hello, Jamie. How are you? We've got Ajith. Holiday. It is indeed a public holiday today, I think, in most countries, bar a few that I am not going to mention because I don't know. We have Pro Raja, hi, good morning. Well, it's afternoon for me more. Ajit saying Gold and Forex on a holiday. Well, technically, no. Gold and Forex is absolutely closed today, but we do have crypto. But what I was thinking we can do today is we can go through one or two pairs with the expectation of what might come on Monday, maybe Tuesday, just before the new year. And I was thinking about us going through a very simple strategy, something that you guys can go and backtest and see whether or not it is something that maybe you might be interested in, that we can have a look at. We've got Remy in the background saying, Merry Christmas. It's truly hardcore trading community that shows up on Christmas Day. Indeed it is. Obviously not everybody celebrates Christmas, which is fine. Everybody has their own cultures and their own religions and should be observed that just because it's a public holiday today, not everybody is going to be celebrating it. Merry Christmas, Fivers family, to everybody joining us today. That is a true dedication. You're in the right place to get ahead in 2026. Oh, Remy, mate, I really appreciate that. We've got Random saying hello. Random. We've got Craig Pereira saying hi. We've got I am Retik saying hi. Bomdia from Game Show. We've got Samir Hill, Merry Christmas. Then we've got Lawal Yusuf, Merry Christmas. Merry Christmas to you as well. We've got Utam saying hi. We've got, Lawal is saying watching from Nigeria. Welcome, African brother. We've got Olo Ballistics saying Merry Christmas from Nigeria as well. Welcome to you as well, my friend. We've got Void. Merry Christmas, Rich and everybody. Merry Christmas to you as well, Void. I am hoping that you have an amazing day. We've got Paulus, good afternoon. We've got MGN Talatia saying greetings. We've got Carol. Good morning. Good morning, Carol. We've got Kaban saying, hello, guys. Hello, sweetie, at Void. Obviously talking to Void. You've got an admirer, Void. Void, not Void. Lawal. Sorry if I'm mispronouncing everybody's names today. Like, I'm reading it like I'm trying to like break up the words and then it just, my mouth and my brain just disconnects from each other. Very well, I'm enjoying my chicken and roll-off rice with my generous neighbors. Well, that's the lovely thing about a holiday like this. You have, in general, communities of people that are going to be spending time together. Usually, it's not just family. It's maybe your neighbors or your neighbors' neighbors. Or sometimes what happens is you get to be with extended family of extended family. You know, let's say it's like your third or fourth cousin, twice removed kind of like thing. Very extended families. So you go and enjoy that day, my friend. We've got Magdalene saying, watching from Kenya. welcome. We've got goedkopen abonnementenorg. Good afternoon, Richard. I know what goedkope is, and I don't know what abonnementenorg is. I'm not sure if this is Afrikaans or not, but okay. Good morning to you as well. We've got Legend of Fother, which is Merry Christmas from Kenya. Oh, Legends of Other. Wow. You see what I mean? Like, Legend of Other. I'm reading the Legend O of and then adding the F to the... so it's Legend of Other. Good morning. How are you as well? PTC DRM saying, when is Fiverr's future? Soon, my friend. It's in the future. It is so soon. 2026, I can't give you an exact date, but the futures program is coming soon. Everybody that's working at the Fivers that is a part of the futures program is working really hard and really diligently to get that program out. But they don't want to rush it, because if you rush something, it's most likely not going to be a good thing. They're putting all of the time and dedication going into that. Have a bit of patience. It's going to come very soon. I don't think it should be something that you should be rushing. But it is something to look forward to. I mean, the futures platform is going to be pretty cool, especially with the Fivers expanding back into the North American market. Futures is going to be a large portion of the live stream as well at some point in the coming year. So just a little bit of patience, my friend. We're going to get there. We've got Akra saying, hello, mac and cheese. Mac and cheese. I don't think I've ever had mac and cheese on Christmas Day. It's usually like very, very typical. It's either a braai, which is a South African thing, or it is some tapas, so like very small selection of things that you can eat, like usually like cold meats or vegetables and stuff like that. Today we are doing a smorgasbord of sorts. So we're doing all kinds of meat products. So it's going to be something that can be put on the grill, so braai stuff, so little meatballs or maybe some chicken wings, stuff like that. And then we will have we take these I don't know what you call them anywhere other than in here, but in South Africa, but it's little morsels, little bites that you have of something, and it's usually like, it could be something like a Vienna or like cocktail onions with a bit of cheese on a toothpick. That's stuff that we also kind of like nibble on. And then we have very typical South African desserts, which would be stuff like melktart, which is I spoke about it yesterday with Victor. It's a boiled or cooked milk tart that you have cinnamon on it. It's sweet, it's creamy, it's usually served cold. It's delicious. I love it. So I'm going to be having that after the stream. Good morning as well to you, Ahmed. Merry Christmas from Thailand. Unfortunately, I have zero knowledge of how to pronounce your name. So I am just going to say thank you very much and welcome from Thailand. We've got Ham saying hi. We've got Uttam saying hello, sir. We've got Edside saying happy Christmas. Watching from Ninja. What is Ninja? What is Ninja? Tell us, Edside, what is Ninja? I have no idea, unless I'm missing something incredibly obvious. Kosigi saying merry from all of Kenya. Oh, maybe Ninja is Kenya. Hakuna Matata. Yeah, that reminds me of the Lion King. Goedkopen Bonnementum is saying that is a Dutch word for subscription special for telephones. Ah, awesome. I know what goedkoop and it means cheap. In like in Afrikaans, goedkoop is just like the same. It just means it's cheap. But in your case, you're saying it's a subscription special, so it means it's cheaper than normal. Interesting. Yeah, and then telephone for us in Afrikaans is just telefoon. So direct translation from English. We've got Molly saying any upcoming discounts for New Year. The only discount that we have currently running is the 2.5K high stakes account, which you can get for $12. Now, normally that account is $24, but you can get it for 50% off. That's the only one that's running at the moment, exactly as Remy has just placed it here for us. And I see that it has been adjusted to a maximum of 2 per users, and that ends on 2nd of January. So you have it from now until the 2nd of January to go and get yourself 2.5K high stakes accounts for $12 each, for a total of $24 for both of them. That's 50% off on all of it. So, and the thing is, it is the same structure. So you have the same rules as any other high stakes program. And on top of that, if you do the scaling is the same as well. So if you're going to scale a 2.5, it becomes a 5K. A 5K becomes a 7.5. 7.5 becomes a 10. 10 becomes a 15, and so on and so forth. So it follows the scaling of all of the high stakes accounts. It follows the same scaling program, which is really good, which means that if you're a good, consistent, profitable trader, you should be able, and you will have the opportunity to take this 2.5K account and scale it eventually up to a maximum of 500,000 for a singular account. So every account that you have can scale up to that amount, which is really good. We've got Stephen in. Hello, Richard. Hello, Stephen. How are you? Edside, Nigeria. Ah, okay. Nigeria. Okay. I get it now. It was right there. I completely missed it. So Nigeria. Okay, cool. Thanks, Edside. I really appreciate that. Good on you for catching me off guard like that. We've got Molly saying, I'm asking about discounts on two-stepped 50K and 100K. Unfortunately, we don't have any discounts at the moment on them. But there may be something like that coming in the future. I don't have any concrete evidence of that, but there isn't any at the moment on the 50K and the 100K. The only discount that we have is on the 2.5K. Martin I, good morning. Merry Christmas. Kosigi saying Nigeria is Nigeria. Excellent. Thanks for that. All right, guys, that is everybody that is chatting at the moment. Merry Christmas to all of you. Like I said in the beginning, if you're not somebody that celebrates Christmas, then have just a happy festive season and enjoy the time off away from work. Those of you who are working at the moment, sucks to be you, sucks to be me as well. I'm also working. But I hope that everybody still has just a good time with family and friends, and that everybody has a very prosperous start to the new year. All right. Kvesolo is saying, morning from the Caribbean. Holy crap. What's up, mate? Like, welcome from the Caribbean. That's awesome. And then comes us also saying, hi, Richard. We're heading into the final week of the year. What is one thing that you're changing in your trading plan? Great question, Remy. Great question. The thing about the new year, or the end of the year coming into a new year, is a lot of people has New Year resolutions. So things that they are trying to kind of like cement that they're going to change about either a habit or just trying to change their lives ever so slightly going into the new year. So generally what happens is people give themselves new goals, new aspirations, things that they would like to achieve in the new year. Now, in general, I don't transcribe to that, because to me, every day is an opportunity for you to start. So it's the now mentality. I know Will refers to it as the Monday mentality. People would say, I'll do it on Monday. Don't worry, I'll do it on Monday. The best time to start is now. But I also do know that there's a lot of people that kind of make it like a ritual for themselves. At the end of the year, they're going to go and sit down. They're going to look at their journals and their terminals, and they kind of like see where it is that things went right, where it went wrong, where are key points for them to maybe adjust and attempt to just focus on a little bit more. So I've been doing that exact thing pretty much the whole year. Every weekend or so on a Sunday, when I'm scheduling my own stream on for the week, which is where I normally schedule my stream, I'll schedule everything on a Sunday. I tend to spend some time in front of my my terminals and my journals, and just kind of going through the trades that I had taken in the week, and I try to see if there's anything during that time that really sticks out as this was outside of the plan, this was an emotional decision, I didn't sleep all that well. In general, what I do is, after I have taken a trade, at the end of the day, I will go and journal those generally 2 to 3 trades that I've taken on the day. I'll journal them, and I will write down exactly what it is that how I felt before taking that trade, how I felt during the time frame that the trade was open, and any decisions that I made during that trade. Did I close it early? Did I cut it short? What did I do? And then whether or not it went to stop loss or take profit if I left it to run to its completion, which is generally something that I want to do. I want to be somebody that I'll enter a trade, I'll minimize everything. So obviously I'll do my analysis, I'll wait for my entry criteria, I'll enter a trade when everything aligns according to what I'm looking for, enter the trade, put my stop loss and my take profit in place, and then just leave it. Then minimize and then go about anything else. But it's a little bit difficult when you're doing live streaming, because the thing is that let's say I take a trade 2 days before. Let's rather say I took one on Tuesday, and on Tuesday this is NAS. Tuesday, if I can remember correctly, we actually had news. Yes, but it was no, sorry, that is the wrong week. This one. Tuesday we had the prelim GDP. All right. So Tuesday was prelim GDP. I took a trade on Tuesday, but it was a London session. So I took the trade somewhere in this region over here, and I just kind of like let it run for a 1-to-1. Now, the idea is that in general, while I'm streaming and while I'm in front of the chart and I have a trade open, I'll be maybe on another chart somewhere over here doing an analysis or having a look at it. But every now and then I'll just see this little section over here. You might not be able to see it all that well, but maybe if you just zoom in a little bit, you should be able to see it. But you can see that there's a change number here. And I remember I take a mental note to say, okay, I took the trade when the price was at, I don't know, let's say this was 100 points up, or 100 movement, 100 points in this case, $100 up. And then it's on 57, then I know, ooh, you know, we're drifting close to my take profit or my stop loss, that kind of like thing. So when you're trading and you're streaming, it's difficult to kind of disassociate from the trade itself, because there's so many reminders. You're constantly looking over there, then I must take a conscious decision. Don't look over there, turn over here, focus here. But every now and then your focus is kind of like drawn to that point and you kind of look at it. And I've got the two screens. So on the one that my hand is in front of right now is usually where the chat is. It's where the screen itself is. But right in front of me is usually where my terminals are. So it's either TradingView, which I use for analysis, drawing up, because it's very quick. It's very intuitive. And then when I go to my terminal to take the trade, it's generally, I don't have to draw anything up over here. I can literally just, I don't have anything for Bitcoin right now, but let's say on the NAS, I have the position sizer that I would then just enter the trade, make sure that all of the, the take profit is at the right place and the stop loss is at the right place, and then I'll just make sure everything is right according to the sizing, and then I'll take the trade. But you don't always have that opportunity when you're streaming as well, because there's just this constant reminder. So that's just something that I want to work on going into the new year, that could potentially make things a little bit easier for myself when trading and streaming at the same time. So that's just something that I'm going to try and work on. It's one of the things that I have found I'm struggling with a little bit. So I have some mental work to work on. Guys, let us know if anybody in chat has got something that they have noticed about their, not necessarily trading style, but something about their trading that they aren't all that happy about, and you would like to either address it in the new year, or you would like to find a way to make it less of an issue. Maybe not cut it out completely, but just reduce the impact ever so slightly. So if anybody has noticed anything, please let me know, and then we can discuss that. So yeah, that's it. I wanted to show this. This was a trade that I took yesterday on my personal account. I didn't take it on any of my prop accounts. I only took it on my personal one. But yes, this is basically the whole analysis. I had to redraw everything up, but it is pretty much as close as I could get it without opening up my journal to have a look at it exactly. So this was the entry point. It was rough somewhere in the middle of this candle over here. So this is the 5-minute chart. This is NAS. I have been focusing on the NAS the last 2 weeks almost entirely, and I have a 75% win rate on the NAS in the last 2 weeks. I have taken a trade every single day, so 10 trades. I'm saying 75% because one of them was half a win, so I cut that one short. So I don't count that as a full win. It's half a win. So I lost 2 trades across that and only half. Why do you risk so big? What do you mean risk so big? Are you talking about the points? So the risk I take is percentage of my account size. That is a good question as well, Martin. I'll get to that one in a second. So this is in points. So, or not in points. This is in dollars. So if you look at NAS 25,670, that's basically the dollar amount of this product, this asset. And the backtesting that I have done has come to the point where I can see a 40 or 400 point movement, which is in this case $40 stop loss and a $60 as a 1 to 5, that kind of like thing. Take profit works really well for me. I jump between 1 to 1s, 1 to 1.5 RRs, and 1 to 2 RRs. So the way that you would look at it is my risk itself would always be 0.25% or 0.5%. It just depends on how deep I am into drawdown or how deep into profit I am. The more into profit I am, the more I'm inclined to go towards 0.5%. And also on non-news days, I will go on to 0.5%. And if I am a little bit more into drawdown, I would go to 0.5% risk. Or on news days, I will go 0.5% risk as well. And then also depends on whether or not I'm trading during the New York session or whether I'm trading during the London session. If I'm trading during the London session, it's generally 0.25% per trade. And then in the New York session, it's generally 0.5% per trade. That's just from my backtesting. That's the thing that I've been working on at the moment. So when we're talking about risk, we're talking about the capital risk or the percentage of the account. This to me made sense to enter where I entered for a 1 to 1.5 R trade. So I will break it down. Basically what we had yesterday was we had this whole area of this is Tokyo. So this pink box is Tokyo, blue box is London, and then this peach-ish color, like a very light orange, is the New York session. So obviously there's an overlap. So we had New York come into very strongly from Tuesday into Wednesday evening, and it did look as though it wanted to try and push higher, but during the Tokyo session, price kind of pushed down ever so slightly. This is on the 5-minute chart. Pushed down ever so slightly, but at no point really threatened to even come and test this high of London session, which if I drew a box over the high of London and I just draw it through, then you'll see that there's basically a break of the London high, a retest, and then a volumetric movement away from it. So if price were to at some point come down with the intention of going lower on the NAS, I would have expected it to at least come and test this. Now, obviously, there's other ways that I kind of have a look at areas that could be tested. I refer to them as my base areas, and it's generally areas that have either had consolidation on a lower time frame or an attempt to pull back a little bit on the 5 to the 15 minute. But I'll go and show you exactly what I mean over here. So price didn't really even come close to this point. So we basically just had this section down here as the low of the day. So when I wake up is roughly around this area. So this is where I wake up. This is my normal time to wake up for the day. It's around about, I'm by the chart usually just after 7. So this is 7 o'clock my time. London session closes. Tokyo session closes, London session opens up, and at no point did we really even try to come back to this point. So if I were to draw a box, I would take it from the last time price tried to push lower before it started moving multiple candles upward direction. So in this case, it would be that section like that. So if I zoom in, you will see, once again on the 5 minute, price pushes lower. So on the 5 minute you have, there we go. If you have, this is the high, you start pushing lower, you have a low. So your two reference points, high and low. So high point, reference point, low point, reference point. And then from there on, you start working your way down. And you try and look for any areas where there was a swing and then a push breaking lower. So this is the very first attempt to try and push higher, which is now a lower high. So this is a lower high. Then price pushed lower, breaking this recent low, making a new low. So this is now a lower low. And then the same thing happens. Price tries to push up again, comes to this point over here. This is a lower high in relation to this previous high point that we had. And it carries on going lower, creating yet again another low. So we have a bearish structure on the 5 minute. It's very plain, simple, straightforward. You can see it all that well. You can draw some sort of descending channel, and you can in some way, shape or form get a close enough idea of what price is doing during this time. Now it doesn't always conform to it, but you can have a general idea that it is pushing lower. And anyway, so with that being said, what I then start looking for is I start looking for a point where price starts showing that it no longer wants to conform to this bearish trend. Yes, it is low time frame. Yes, that's what I'm looking for. I'm looking for the lower time frame. So in this case, price then eventually created the low, which was the last lower low that we had created. Price then started pushing up, creating a lower high, which is the very first lower high. Now, if we were to continue on this exact same downward trajectory, we would have expected this being a lower high because it's lower than the previous swing point. We would expect a lower low now. So I want the price to start pushing lower, breaking lower than this low, which is technically the low of the Tokyo session. So I want price to push lower. What did we get? We didn't get that at all. We started printing a higher low, a higher high, and then a lower high, a lower low yet again. So we're showing some signs of slowed downward momentum, first and foremost. And secondly, we're showing that price doesn't really know where it wants to go. It's trying to push lower. It's trying to push higher. It's failing. It's trying to push lower. It fails. And what happens is we start going into a little bit of consolidation. Now, it doesn't seem like very large consolidation, but the point still stands that when you're having a low point down here and now you have a new reference high point, because this high point here was the first one that broke effectively the downward trend. If this one over here was your recent lower high, and this was secondary lower high, and this was your lower low, this is your very first higher low, and this is your, once again, new higher high. So this becomes a higher high in relation to the previous high point, and this becomes a higher low in relation to your previous low. And on top of that, when it does eventually start coming down again to try and take out this low point here, it doesn't even come close, and it starts reacting off of it. And then what eventually happens again, when price comes back to it, it reacts off of this exact same point yet again. So this just shows that price is struggling to pick a side, but when it's trying to go down, it's failing hard. So you start seeing the failure in terms of the bigger wicks below, starting seeing the bigger wicks below the swing points. So if this was your most recent swing point down here with very little wick below it, now all of a sudden you have a significant wick below that, first and foremost. But what follows up is the volumetric movement off of that area. So this becomes what I think a lot of people might refer to as an order block. The idea is just that when price came to this point, there was very little attempt to push lower. Yes, it wicked lower than this previous swing point, but it didn't even come close to the low of the day. And then it volumetrically reacted. So this is one of the strongest reactions we've seen, bar this reaction, which was the low of the day up to that point. So you have a strong reaction, mediocre reactions pushing lower, a little bit of sideways action, strong reaction, and then an attempt at a strong reaction lower. But look where this attempt for price to push lower. This was 12 o'clock my time, so this is what, 10 o'clock Central European time. There was an attempt to push price lower. It didn't even come close. If I just take the high point of that wick, there we go, and the low point, as you can see, this box is unfilled. So strong reaction, failure. And then price starts to attempt to push higher. It doesn't make a higher high in this area over here, but once again, it makes an attempt to push lower and just fails. So for me, that then signifies that this area down here is now the low. The last swing price on the London session was the low. Obviously, we have the low of the day, which is all the way down here, but that one is of no concern to me right now. If price were to come back to this point, it needs to break through this point first and foremost. So with that being said, I extend it and I start looking for trades. Now, you might ask yourself a question, why did I not take a trade from this area over here? Well, it's simple. We had news. So there was news at 15:30 my time, which wasn't super high impact. It was unemployment claims here. So unemployment claims at 15:30 my time. So if I'm going to enter a trade all the way over here, which is 13:50, wait for the reaction. There's the reaction that I'm looking for, the nice strong volumetric reaction. That's 2 o'clock. So an hour and a half before potential high impact news. I don't like trading an hour before news. Half an hour is too close to that. I will just wait. I'll just wait for London to close, not close, New York to open, and then I'll look for my trade there. So I generally like trading after the news, not before news. So you could argue that there is a reason to enter here. Let's say you're not somebody that cares about news. Let's say you're not at all bothered by it. You can wait for a strong enough reaction to show that this downward movement is complete, which should be this candle over here. And I'll explain why I'm saying that candle in a moment. So what you have is you have this attempt down here. It makes like a curved, like almost a crescent shape. If you marked it nicely, I'm not going to be able to mark it nicely, but you get a U shape, basically. So this is usually a signifier of slowed downward momentum and then a potential turn to push price higher, potentially. But when I'm saying potentially, I mean that this could just be a fake out. We could be slowing down because there is lower momentum overall in the market. Maybe there isn't enough buyers and sellers at that point, or it could just be we're waiting for a news event to happen and then that's going to bring in some sort of volume. But in this case, this usually is a signifier of slow downward momentum, especially if it is at an area where previously price has struggled to break lower or break higher. So it's always a good thing to try and take into consideration the previous price points and then what it is that you would like to see if price were to come back to that price point. So the fact that we have the slowed downward momentum in this area, we have multiple reactions off of this point prior to getting to this one over here. We've had this downward structure that got broken, and it seems as though we've entered into a slight sideways consolidation. And now what is the next thing to happen after consolidation? It's expansion. So we want to see price either move volumetrically up or volumetrically down. And in this case, you can get volumetric upward movements more likely because of the fact that when we had this attempt to try and push lower, we just failed. So, and then what I said also as well is you can make a case for entering a trade just before news, but that is something that I would suggest go and do back testing on, or know exactly what it is that you're looking for fundamentally. If you expect the price or the dollar to be weakened by this, then don't try and buy for argument's sake, or sell for argument's sake, pound dollar as an example. So just go and do your back testing. And the thing is, this is something, this kind of setup is something that you can find on pretty much any market. You just need to know what it is that you're looking for, and you're looking for a specific amount of volatility, you're looking for a specific amount of volume, and then you just want to see price react off of a previously established area, which could be a low of a session or a low of the day, that kind of like thing. And then you want to see multiple attempts to try and break through that established zone, and then you want to see slowed momentum. You want to see these candles at that area. Now, you can justify that exact same thing by saying, oh, but this area over here is also a reaction. Okay, fair enough. Where is it reacting from? So you can pull that across and you can say, okay, well, we've had one attempt, a failed attempt over there. I tried to push a little bit into it here and then failing and then pushing lower. Fair enough. But then you have to go and look to the left of that, and you have to kind of like look like, where was the majority of the reaction? Yes, there was a strong reaction from these bars over here, multiple ones pushing it lower. So this is fair. This is fair to assume that this might be a very nice area to attempt to take a sell from. But overall, the NAS was a little bit more bullish. So your bias on the day might be a little bit more informed by what is happening the previous day. So in general, I might be looking more for NAS buys in general. So my bias is informing my decision to say, okay, I see it's reacting here, but I don't really want to see buys. I'm more interested in seeing sells, just because, the opposite, sorry. I'm not interested in seeing sells. I'm more interested in seeing buys, because the bias of the previous day or the previous weeks or whatever is more in line with bearish movement, a bullish movement. Why am my brain not braining at the moment? So with that being said, what I then looked for was for it to come back during or just after the news. So in this case, this was the news candle. It was this body with a large wick above. Now, I don't really care what was the actual numbers for the unemployment claims. What I care for is to see the reaction on the chart. I want to see how price reacts after that event. So if this was the news block, so I'm just going to make it like this. If this is the news block, I want to see how price is going to react around this news area. Now, obviously, there's two things to take into consideration. First and foremost is when you're looking at volume in the market, we're referring to participation. We're referring to where is the majority of the players in the market. I want to see whether or not somebody, a hedge fund, a bank or something, what am I doing with this? Oh, there we go. I want to see where those participation is coming from. And in general, it comes from when there's an overlap between the London session and the New York session. So the London session is this blue one. The New York session is this orange-like one. So generally, you will get the majority of your participants in this area over here. So basically from that point to that point over there, in this box. That is where you're going to get it. So my time, South African Standard Time, it is from 16:30 until 18:30, so 2 hours. So 2-hour overlap between the London session and the New York session, where the majority of your participants are going to sit. So I would like to look for a trade entry primarily within this area. So I don't trade the opening range breakout strategy. That's not something that I trade at all. But it is something to kind of like take into consideration, because in general, you have this opening range over here that tends to kind of like give you some telltale signs of what it is that the market is looking for. Because what is this opening range? It is effectively where the participants of the New York session, the stock market section, where the majority of their I want to get my trade in really quickly now is coming from. So it's all of the market participants suddenly within the New York session coming to play. And it can cause quite a bit of tumultuous movements, up and down, sideways, strong movements. But give it an hour, 45 minutes, half an hour, and you start seeing the development of a direction. And that development of a direction is generally going to be either the direction for the majority of the New York session, or it's going to be the majority of the next few days. So if it is a Monday, then maybe you should see something a little bit more sideways action. Maybe on a Tuesday, you start getting the development of the week's direction. This is all things that you can go and backtest and you can go and look for yourself. Specifically for this trade, what I was looking for was I wanted to see what was New York's reaction to that news event. So I did not care what the London participants cared about this news event. I wanted to see how New York was going to react to it, because this is where the majority of all of the participants sat in this box. So I want to see how they react. And it was telltale. New York bell, it opens, it attempts to push price higher. You have a swing point. This was the most recent high. It was also the high of the day. So this is the high of the day. This line down here is the low of the day. So we want to see which one of these is going to be broken coming into New York. So here we see this high swing over here of the day. New York opens up. It fails to reach it, but then immediately takes all of the opening candle, the opening 5 minutes, it takes it back. Now, this is not a particularly strong movement if you go and look at the amount of points that it moved. So if I just take the ruler and I take the top end of this, maybe I should take the box. Box is a little bit easier. Oh, I don't have the, there we go. I switch on the magnet tool and then it magnetizes straight to the top point of the candle. From there down to the lowest point was only $31. So that is 310 points. It's not a lot. If you consider the way that NAS can move, it's really not all that much. So in that case, when it tried to push lower, which is what this opening candle is an attempt to push price higher. This is an attempt to push price lower. Once again, this signifies indecision. You have pretty much the same size, slight difference on the size of the candles, but the actual move across that period was different. So that's the top point of the open. That is, the top point of the follow-up candle. This is the low point of the opening candle, and that is the, so it is effectively an inside, I don't know if it's an inside bar, but this whole movement fits within the whole movement of the previous candle. But it's not the point that I'm trying to make. The point that I'm trying to make is that this generally signifies a little bit of indecision. We don't quite know which way we want to go. So we want to wait. We want to be patient. We wait for a reaction after these candles that proves that this is definitely the direction that we want to go in. So what do we see? We see that price is struggling to push lower. If the New York open low is the most recent low, these follow-up candles at no point attempted to take that low. That's first and foremost. Secondly is I have this boxed area that I can draw all the way through, and I can see that price reacted off of it. And it just so happened to be very close to the low of the London session. It's also very close to the low of the day. So up until this point, the low of the day is the strongest area of resistance that we have. So in this case, it's a support level because price bounds off of it and starts pushing higher. But it's also a resistance point for the sells. So at this point over here, we had sells trying to push price lower and then failed to push past this point and then started reacting. So this became a resistance point for sells. So in this case, we're trying to push price higher. So what am I looking for? Now, what is my confirmation? What is my entry criteria? I want to see price pick a direction after choosing to struggle here. Now, there's two ways that you can wait for confirmation. First and foremost is you can go and look for the very first candle that breaks higher than the previous bearish structure. This was the most recent bearish candle. We're looking for the very first candle that breaks either the high or the low of this point. Now, in this case, we're looking for it to break the high because we know now that we're looking for a bullish movement because we're struggling to push lower. We've reacted on the previous established area. I want to now see bulls take over. I always talk about the arm wrestle between the bulls and the bears. I want to see which one wins. So that the follow-up round, if there is another attempt by the bears to try and break that upward push, then I can maybe make another decision. So in this case, the first area where that happens is on this candle. So what you can do is you can then say, you know what? The moment this candle breaks and closes above the last bearish candle, I can attempt to take a buy from that point. I have my stop loss just below the local swing. So let's just do that. Just going to move everything out of the way. And then I'm just going to mark the most recent swing is this low point, the low point of the day. And you can have it lower than that, $1 to $2. It's really up to you. I generally try and keep it at least twice the size of the spread, and the spread on NAS on that time was about $1.5, so I'll keep it about 3. So if this is 24, I'll take it to 27, so 27.8 as an example, so somewhere around there. All right, and then what I'm going to be looking for is a 1 to 1.5 or a 1 to 2. That's what I'm looking for on NAS. So then if that's my entry point, I will just scale this up until I either reach a 1.5 or until I reach a 1.2, which is somewhere over there. So that is one of the two entry criterias that I look for. So what you'll notice here is if this is the push higher, we have a break-even bounce and then a continuation. So that's the first one. Very simple, very straightforward. It is one of the trades that I tend to take more often in the New York session because generally it reacts very well. I can get my 1 to 2s, I can get my 1 to 1.5s, and if I'm risking here, I'm risking 0.5%. So if my account is 100K, I'm risking $500 on this trade, trying to make $750 to $1,000 on this trade, as an example. I generally do not go larger than 0.5% on my trades. I just don't need to. 0.5% and 0.25%, I'm more than happy to do that. So this is one entry criteria. So you guys can go and pause if you want to, and you can screen grab this and kind of look at it, what it is that I saw, and maybe see if this is something that you notice as well. This is one trade. Another one is my rally-based rally, drop-based drop. So usually how this one works is the exact same formula. I also wait for a reaction off of an established level, which in this case was the low of the day, slowed momentum, and then I want to see a direction picked. So in this case, we have this bullish movement here. Now, what makes this a significant move is first and foremost, it broke the previous highest point of the day. That's the first thing. The second thing is that when it tried to push back lower, this candle over here, this is my base. This is one where this candle must not break lower than the previous low swing. And then I need a follow-up bullish candle. So you can see it as this is the rally. It's multiple bullish candles in a row after a reaction off of an established level, after slowed momentum or reversal as an example. This base candle is just the attempt for the bears to take over from the bulls with this back and forth arm wrestle. And then the follow-up rally candle is this bullish candle, is the one that signifies that the bears don't have control here. Nice attempt, but sorry, you're not in control. The bulls are in control. They absolutely smash that hand down onto the table. And the reason why I'm saying this is because generally, if you have an attempt by one of the two, either a bull rally or a bear drop, is multiple candles in a row. So you can see with 1, 2, 3, 4, 5, 6 bullish candles, one bearish candle. Yes, it's a strong bearish candle, but what does it break? It doesn't break anything. You've just broken the previous high point. So you know that there is a potential that if this bearish structure were to continue, that they would be follow-up bearish candles pushing it lower. But there isn't. It's a bull, bear, and then another bull. And then what I look for is I want to then enter on the close of this candle. So because I'm paying attention to what I'm seeing here, I'm waiting for this reaction. The moment I see this reaction, I enter my trade. And I have set stop loss and take profit points for this specific trade. So it's either a 1 to 2 or a 1 to 1.5. Now, if I enter earlier, like I explained on the very first entry point, I will go for a 1 to 2. If I'm entering a little bit later, I'll be going for a 1 to 1.5. And then on top of that, what I can do is I can corroborate my take profit point with an area on the left to see if there is a structure on the left-hand side that makes sense. So what I'm going to do is I'm just going to draw a straight line. So let's just add a horizontal line. There we go. At that point. So that is where my take profit is. Now I'm going to look on the left-hand side whether or not there is any sort of structure that supports the potential for this to be a good take profit point. So what I mean by that is I want to see if there is another base area or order block that is potentially going to be tested. So in this case, this is just on the 5 minute. Now, I should probably elaborate on this. I do all of my entries on either the 5 minute or the 15. I do my analysis from the 1 hour, the 15, and the 5. At the beginning of the week, I go up to the 4 hour. And at the beginning, I will also potentially go up to the daily if the 4 hour is not clear. Then I would try and go up one higher than the previous one that I normally go to. And it's because I'm an intraday trader. I don't swing trade. I don't care whether or not we are to the moon or highest point. I just want to see if there is a local area right now that I can react off of, because I'm not a predictive trader. I'm a reactive trader. I react to the market. I have no control over it. So in this case, if I look over here, this was a Tokyo session that had a little bit of a consolidation. Now, it's not all that strong. It's about $60, so it's 600 points. But I'm not looking for the full size of this consolidation. I'm looking for the specific point where the consolidation failed, where the follow-up bearish action or bullish action took over. And in that case, if I just remove that whole area over there, I can see that this was the last area over here where price attempted to consolidate. So you kind of have price come to a point and then break. So in this case, it was this area down over here. But what am I looking for? I'm looking for the candle specifically that broke that consolidation. That's one thing. And I want to see volumetric movements. I want to see good, solid, strong movement out of that area. And what are you looking for? You're looking for a candle much like these ones. So there you have a strong downward push. This strong downward push breaks all of the local structure that you had. If this was a swing point, it broke it. If this was a swing point, it broke it. Down here, if this was a swing point, it got broken as well. So there is so many of these local swing points that all got broken on your way down. So if this wanted to be a bullish structure trying to push up, obviously you would see all of this action above and you would see it try and break the high points, but you don't. You see it trying to push lower, especially if you have a bit of consolidation. And on top of that, you also had this semi-sideways action. The lows and the highs of the previous days are very, very similar to each other. So if I were to go up to the daily chart, you would see that the lows and the highs of the day and the open and closes would be quite similar to each other. Anyway, so now that I have the area that is close to my take profit point, now I need to find the exact point. And the exact point to me is the very last bullish attempt before price broke lower. So in that case, it's these two candles right over here. Because what happened? price reacted strongly out of it. Strong, volumetric, big candles in relation to the previous candles. So what do? I mark the top and the bottom of that candle as an example, and then I will try and draw it out, and I will see if there's a way for me to refine this. So generally, in this case, bullish movements, or bearish movements, my apologies, I don't take the last bullish movement's candle wicks on the lower side. I will take the body open of the last bullish attempt and the highest point that bullish attempt made. So I will take the full body and then the candle of the highest point. Now, if it was the inverse, if it was for a bearish reaction after or during a bullish upward movement, let's see if there is one, maybe on the left. Let's say this. So last attempt to try and push price lower is here. Price starts pushing up. What I will take is I will take the last bearish candle plus the lowest point that it made, in which case is this. Now, if there was a wick above this, like that, I won't take the wick into consideration. I just take the body open and the lowest point for the bearish structure. So that's just something to take into consideration. Anyway, well, that's how I view it. So anyway, so that was the last point. So what do? I just extend this all the way to the left. Sorry, to the right. And I go and look at to see how my, let's just do this, how my take profit plays in regards to this point. I know that previously price reacted from that area. So I know that there's a potential in the future if the price comes back to that point that it may have a reaction. So why would I want to have my take profit be above that point when I know that at that point there was a reaction? So I want my take profit to be either just below that point or somewhere in that box. I don't want it to be above the box. Now, in this case, if it was above the box, it wouldn't have mattered. It would have hit that TP regardless. But for me, it's about the idea of consistently doing something. I have a systematic approach to entering my trades. So for me, having a stop loss or a take profit be hit is fine. I don't mind if it is. I'm not trying to get the most out of every single trade. I'm trying to get consistent trades. Every trade must be the same. And that's how I will approach it. And this is the trade that I took. Yes, I got a little bit of slippage on this trade. This isn't exactly where it was. I'm not going to open up. I don't have the terminal open at the moment. But this was, well, how long was this? From 1730 to 1835. This was an hour and 5 minutes for a 1.5 hour trade. I risked 0.5%, 0.75. So 0.75%. If I had a 100K account, it would have been $750. And that is generally what I'm looking for. So this is something that I think a lot of people could really, going into 2026, it can really help them, is try and find a process within trading that simplifies the trade itself. The analysis you can make your analysis as complicated as you want. But the trade itself should be simple. It should be straightforward. Where do I enter? When do I close? If I enter, am I going to close? If I close, I need to decide when. If I enter and I'm putting static take profits and stop losses, or I have static risk to reward ratios, by all means, just make your the trade itself during the strategy portion as simple as you can make it. The less decision points that you have to go through when placing a trade, the less second guessing you're going to have. You're not going to second guess yourself if you have 1 to 2 things that you're looking at. So if the idea is, okay, consolidation break. If I break, I enter. I enter for a 1-to-1. My stop loss is below the consolidation, a 1-to-1 R. By all means, that's great. All you have to do is just decide what constitutes consolidation. If I have this little box area over here as consolidation and I get the break, by all means, I will say, okay, cool, there's the break of it. the first candle that closes above, I will have my stop loss below the, sorry, like that. I have my stop loss just below, let's say 1 or 2 pips or 1 or 2 points, and I look for a 1-to-1. There is a trade done and dusted, as an example. Now, I'm not saying this is something that you should trade or how you should trade it. I'm saying that if you are going to simplify your process, find a way for you to get it so simple that it is nearly impossible for you to second guess yourself. Rule number 1, rule number 2, if these 2 things are hit, this is what I'm going to do. I'm going to take a buy. This is where my stop loss is going to be. This is my risk to reward that I'm going to take. Done and dusted. And I think for 2026, that should be the majority of people's focus. If it is something that you're struggling with, obviously. If it isn't something that you're struggling with, if there's some other facet of your trading that is a problem, then obviously that should be the thing that you're going to be paying attention to and that you're going to try and resolve. For 2026, there is a very interesting thing that's coming out very soon from the Fiverr side. I'm not going to give any specific details, but what I can tell you is that it is massive. It is amazingly awesome. It is probably going to be very soon into the year. Don't quote me on it though. But I think this thing that the Fiverr is working on, it's an internal thing that they're working on, is going to be an absolute godsend for traders. Specifically those that struggle with the psychology of trading, and maybe those that are struggling with doubts, fear, FOMO, all of that kind of like stuff. So something really, really awesome that's coming. I'm just going to have a quick little look at chat. I went on a massive rant there. I didn't stop talking for an hour. What was the last message? So digital tech, why do you risk so big? Already explained that. I only risk 0.25% to 0.5% of my capital risk per trade on a on any account, really. It doesn't matter if it's a personal account or whatnot. I tend to stay to 0.25% to 0.5%. Martin I saying, let's talk about FOMO. And when in trade, when it's in the red, you just pull down stop loss, hope it's going to go back. And when it's green, close out in small profit. So at the end, you come out with a small win or big losses. Now, I think this is probably one of the biggest struggle points for a lot of people, is the fact that the fear of missing out is generally the idea that people get in when they fear that they're going to miss the move, but it's usually not according to their strategy. You see the movement and you're like, I have to be a part of this. It's greed. It's the idea that what I'm about to do now is going to be outside of a plan, because you're reacting to something that you haven't analyzed. You look at it and you're saying, oh, it's moving. I should enter. So what I found to combat that is, if I have a reaction such as, let's look for a reaction. Here's a good one. Sorry. If I look at this was on Tuesday. If I see this candle over here, this massive, strong candle in relation to all of this reaction that was here, I'm going to feel like, oh, I should get in right here. The moment this candle closes, I need to be in it. And I look at something like this, I don't know, like whatever my stop loss might be, doesn't matter. This is a trade that's outside of a plan. This is a FOMO trade. What's going to happen? Sometimes it's going to rally and you're going to make good profits. Congratulations, you. But is it replicatable? Is it something that you can do consistently? No, it is not, because it's not a plan. It is you just throwing your money on the table and hoping it lands on red. It's gambling. So what's going to happen here in this case is it would have come down and it would have taken out my stop loss. No problem. So I would have felt like crap if this was a trade that I took on FOMO. So what do I want to do? I don't want to feel like crap. I don't want to punish myself for the decisions that I'm making. And this was a decision that I would have made and I would have kicked myself for it. So I've decided, okay, I can't enter on a trade that has broken out. I don't enter breakout trades. I will wait for the retest, or I will wait for my base to be established and then have my rally after that. So what am I looking for? Yes, price breaks out. Don't enter this because there's a chance it's going to go in my favor. I'll feel happy because I've made some money, but there's a strong chance it's going to go against me and I'm going to feel like crap. And I don't want to punish myself. I'm not a masochist. I don't want to hurt myself. And if I were to enter based on this without doing the back test, without having the data to support my hypothesis that this price is going to carry on pushing up, then I'm doing it blindly. I'm doing it like a gambler. And there's just no point in doing that because you're just harming yourself. That decision is going to harm your account. It's going to harm your psychology, and it's just you're just not going to be happy with it. So I put a rule. I was going to say a law. I put a rule in place that said that I'm not allowed to trade breakouts. And if I do that, if I enter immediately, I have to close it. If I just go and I click and I'm like, you know what? I'm not allowed to trade breakouts. Close the trade. And then I'm going to feel like an idiot because I'm like, why did you do that? Why? And then, but the idea is to try and work against it. So my idea is I will wait for a follow-up. In this case, I probably would have tried to enter here for a sell as an example, even though we did not break lower than this low point. I probably would not have entered on this as a sell. I probably would have tried to ride it up to the top, but it's not the point. So when it comes to FOMO, you need to ask yourself the question, the decision that I'm about to take, is this going to harm or help my psychology? Not my account. I used to say, does it harm or help my account? Screw that. Is it going to harm or help my psychology? If it's going to harm or help my psychology, it's going to directly impact my account. So if my psychology is being tested and it's being kicked around, my account is going to suffer for it. So when it comes to FOMO, the best thing that you can do is if you're feeling FOMO, you walk away. Walk away from your trade. That's the first and foremost thing. The second thing is find yourself a strategy or build yourself a strategy that does not rely on you needing to micromanage the trade when the trade is open. So if your strategy relies on you taking profit at certain points and then pulling your stop loss up and then leaving the other half of your trade to run, you can find EAs that would be that can take half of your lot size off and then move your stop loss up for you, as an example. So there's different ways for you to try and attempt to tackle FOMO. And the thing is, at the end of the day, FOMO is a fear response. So I fear I'm going to miss out on this profits. So that is an internal struggle. It's not a strategy problem. It's a psychology problem. So that is one of the hardest things to kind of like address and work on. So for me, static take profit, static stop loss, back test to make sure that it's profitable. If it's profitable, I look for my entry criteria. I put my stop loss, I put my take profit, and I close. I minimize everything and I walk away. And that is how I deal with the idea of trying to micromanage my trade. It's going to hit stop loss or it's going to hit take profit. One of the two. So I know what the outcome is going to be for every trade that I take. I don't know if it's going to be a win or a loss, but I know that if I do win, it's going to be a 2x or a 1 to 1.5x, depending on when I'm trading, if I win. And if I lose, it's going to be 1x. Done. As simple as that. As easy as you can do that. How much percentage do you risk per trade? Like I explained, quarter of a percent or 0.5%, depending on where we are. What is the Christmas session without a gift giveaway? Well, what you're getting is my company, first and foremost. No, all jokes aside, we don't have a giveaway today, and I'm definitely not authorized to give a giveaway. But what I do have is I do have 0.5% off on the 2.5K accounts. For $12, you can get a 2.5K high stakes account, 2 of them for $12 each. $12 for account. You can have up to 2 of them. You can get them before the 2nd of January when this little giveaway, or not giveaway, this little, let's just call it a giveaway. This deal expires. Marina, hi Marina, Merry Christmas. Merry Christmas to you as well, Marina. Inner Smart Money saying Merry Christmas to you as well. We've got Gabe, Happy Christmas, guys, from Ethiopia. Welcome, my African brother. Mexican. Welcome, Richard, from Zalale Mendal. We've got Desire FX Vibes. Does it also have a scaling plan? Yes, it does. It follows the exact scaling plan of all of the high stakes, just from 2.5K instead of a 5K. So you go 2.5, 5K, 7.5, 10K, and so on and so forth. It starts going up like that. Aditya saying, Merry Christmas, Richard. Merry Christmas to you as well. P5 provider, hi. Top one prop firm, the Fivers. Yes, number one in the world, best prop firm. Yes, I do work for the Fivers, but the Fivers is the absolute best. I would not be here if I did not think that they were the best and that they could not provide us with the best trading conditions. I have very, very little negative to say about the Fivers whatsoever. We've got Pundit again. Hello. Wave. I can see that you are really wishing for the attention, Pundit. Please don't try and spam. It's very annoying. But hello to you, Pundit. Othelm saying 20K bootcamp, not today, unfortunately. But like I explained earlier, we do have a deal on the 2.5K, which you can get for $12, which is super cheap. EPP, Merry Christmas, everyone. Merry Christmas to you as well. Techie saying, I suffer from FOMO. I really need to manage my trades well. You are speaking directly to me. The thing about FOMO is that is a daily struggle. It's not, you're not going to fix it today and then tomorrow you're no longer going to have FOMO. The thing about psychology is that it's a daily grind. Every single day is that battle. It's like Sisyphus pushing that stone up the hill. The moment it's up the hill, it rolls back down again and you have to go and pick it up from down there and start pushing it up the hill again. It's a daily task. But it's a very satisfying task when you start seeing results. And you will only start seeing the results after a few weeks or whatnot of trading and you realize, but hold on a second. The last 4 trades that I took was exactly according to my plan. And I did not, when I did my journaling, I did not write down once that this was a FOMO trade. That is incredibly satisfying. And that feeling that you get from that simple, wow, I didn't FOMO trade once this week, becomes like a driving force for you to be like, I don't want to FOMO trade ever. Why did I ever want to FOMO trade? I lose half of my trades or I lose 70% of my trades when I FOMO trade, but when I'm following my plan, I'm winning 70% of my trades. Why would I want to ever go back to that? Don't be a martyr. Don't try and punish yourself for this thing, this FOMO. Let whatever decision you make be in service of the person that you want to be tomorrow. So the decision that I'm taking today, if I choose to enter a FOMO trade, I know that it's going to harm my psychology and it's going to make tomorrow Richard have to work harder. So try and make decisions that is going to make you, techie, the future version of you of tomorrow or the day after's psychological load less. That's what I would say. Sashan saying, good evening, Bitcoin. I was going to have a look at Bitcoin, but I don't generally trade Bitcoin, so I don't really feel like my input would generally be the best input for it. I haven't had a look at Bitcoin. How long ago have I had a look at Bitcoin? Let's see, what did I mark up last? Wow, this is Friday the 19th, I think was the last time I had a look at it. Had this area of interest over here, a reaction. We were consolidating between these 2 points. We had a bit of consolidation here on the 14th, breakout, retest, continuation lower, back to this area of this lower point, support point. We retested again. Let's see. Yeah, we retested it again on Monday, trying to push higher. We failed yet again, but we're still stuck in this band. This upper band, I think, will probably still come into play. But as of right now, we're stuck between these 2 points here. Now, it might be a large zone. How large is this whole section? Let's say from here to there. That's $6,000, so that's quite an area. It's quite large, but I mean, I'm not quite sure what I would want to look for on Bitcoin. I really struggle with consolidative on, let's say, non-trending pairs, because my strategy requires it to be bullish or bearish, and strongly so. And in this case, it is neither one of those two. It's consolidating at the moment. And we had this very slow downward trend like this. So it's a little bit unappetizing for me to enter this. If I had to go down and say, oh yeah, it looks like we might have some sort of area to test there, but it's consolidated. We did have a strong reaction from this area over here, but it just doesn't look appetizing to me at all. I'm a little what's the word? I'm a little disincentivized to trade Bitcoin, because I kind of like I've lost my yearning to even look at it. But that's a personal reason. It's like a lot of decisions that I make have been about trying to simplify trading for myself. And Bitcoin kind of has just always left me with a little bit of a sour taste in my mouth. I view Bitcoin more as a buy and hold kind of trading. So almost like you would trade a stock or something. Is just to buy it and hold it until a certain point, and then you get rid of it at some point. But Bitcoin, to me, I sold Bitcoin when it was like, I think at 117,000, somewhere around there. How long ago was that? Somewhere here. I can't remember exactly when I got rid of. So somewhere in this band, when was this? This was July. Between July and October, I got rid of all of my Bitcoin. Sold my Bitcoin. But yeah, so as a day trading thing, I don't really like Bitcoin, purely for the idea that you have these large sections, like this is on the daily, but you have these like very volatile movements on the day. And it doesn't really trend all that well for me and how I like to trade. So, I would love to break Bitcoin down for you, but I just don't consider myself to be a strong enough technical Bitcoin analyst, because it just moves so volatile for me. So I feel like I'm a good enough analyst, but like when it comes to Bitcoin doesn't follow the same technical movements as other ones, because it is so volatile. You have these very wicky days, and if you go down to the lower time frame, you have these massive, movement in one direction and then completely opposite direction, massive direction, completely opposite direction, massive movement, completely opposite direction, so on and so forth. To me, Bitcoin is just a nightmare to trade. Techie, thank you. No problem, mate. Like, which time frame is better? It really depends on what it is that you're trying to achieve. Personally, if I'm doing intraday, I enter on the 5 minute, and I see everything that I want to see on the 5 minute. As an example, I wanted to show you on the 15 minute the bases that I'm referring to. So generally, you can see it on the 5 and the 15 as an example. So here you have that reaction point, lovely break of this high point over here. You have your base candle and then your continuation higher. So that is what I look for. So if I'm going to be entering this as a base, it's going to look something like that. Reaction off of an established point down over here. As an example, this is a low. It reacted off of it. You get this nice 15-minute indecision candle over here. or reversal candle. So like I said, you have this like U-shape reaction. Price starts going higher. It breaks the most previous high point, most previous high swing point. It breaks it. Doesn't close above it on the 15 minute, but it closes above on the 1 minute. It closes above on the 5 minute, but it swings above on the 15 minute, which is still an indication price wants to go up. Base, so rally, base, rally. Enter on the close as an example, somewhere over there. You look for a 1-to-1 or a 1-to-1.5 as an example, and then there's the trade. So that's generally what I'm looking for on the 5 and the 15, and I get it there. I know a lot of people that only trade on the 1 hour as an example, and then I know that Jonathan doesn't tend to go even lower than the 4 hour. So there's different strokes for different folks, that kind of like thing. Just so long as your strategy that you're looking at is, or that you incorporate into your trading, conforms exactly to what you're looking for. And if you use the 1 minute, just make sure that you consistently do what it is that you're looking for on the 1 minute. Simple as that. Ben, Merry Christmas. Merry Christmas to you as well. 2.5K scale up. Yes, you can scale it. 2.5 all the way to 500,000. The 2.5K is exactly the same. It's just half the size of a 5K, and it's just cheaper. It will be a personal question. You don't have to answer. What is your main account size now at the Fivers already scaled up? I'm going to keep that one personal. I don't generally talk about my prop firm accounts. I don't just trade the Fivers prop accounts. I have other prop firms that I also trade with. So I'm quite personal when it comes to my account sizes. The only one that I have that I will talk about is my 5K, which is my stream account. I only trade this one on stream, or try to at least. So this account I will trade again on Monday. So for those of you who will be here, I'll try and put in a trade on this account on that one. So this one is open for everybody to see. You get to see all of my profits, all of my losses on this one, and I tend to also keep all of the journaling for it as well, which once I have enough trades I can show that to you as well. But I do have a fair few prop accounts that I also trade, but I also trade personal accounts as well. Feelings will always be there. That is true. Look, it's not your job to fight against them. It's your job to feel them and then work with them afterwards. So if I'm feeling FOMO now, I need to put steps into place right now to curb that feeling, and then I can address it at a later stage and say, you know what, okay, I'm feeling FOMO. Why am I feeling FOMO? And then kind of like dissect it and work through it. I try not to work against my feelings. I kind of set them aside and deal with them a little bit later when I can focus on them. Regarding the FOMO, I get solve it out once I start to do journaling and review and have a weekly game plan and daily game plan. Love that. The thing is, you need to get to a point where you make the conscious decision to say, I don't want to trade like this anymore. I don't want to trade with FOMO. This sucks. I'm losing accounts. I'm losing money. I don't want to do this anymore. And then after that, you can start putting in active decision points for you to help you not do that anymore. And if your case, it's a daily review with a weekly plan and a daily game plan, that's great, man. Like that's really good. Hello, Santa. Yeah, hello. I'm looking for it. Didn't see that option. On which one is this, Jacob, that you're referring to? I was looking for it. I didn't see the option. Are you talking about the 2.5K account? It's if you go and open, or if you try and buy a new account, you will see on the high stakes section, far to the left is the 2.5K. It should be there. Jai Shri Ram and Merry Christmas. Merry Christmas to you as well. When you buy and hold, what is the swap fee like? The swap fee is going to depend. It's going to depend on which asset you're trading and when you're holding that. So if you're holding it over the weekend, it's going to be a little bit more. And if you hold it over Wednesdays as well, it's also going to be more. So here's an interesting thing. So everybody that has this position sizer, it's an EA, it's free to use. You can get it at earnforex.com. You can go and download it. You can use it on any MT5 and MT4 terminal. You can use it with the Fivers. I use it with the Fivers. It's lovely. The nice thing is it's got a margin tab, and on that margin, not margin tab, sorry, it's got a swaps tab. And on the swaps tab, it can show you in points and when the triple swaps or when your largest swaps are going to be and what it's going to be per lot size. That's awesome. You don't have to even calculate it. That's the first thing. The second thing is you can go onto your navigator box. Sorry, not the navigator. Symbols box. And when you have your symbols box up and you look at a specific symbol, when you look at the information, so in this case, let's go to a Forex pair. Let's go at GBP. So at GBP, the Great British Pound versus the US dollar, this information box, if you read down here, you'll eventually get to a point where it looks at swap types. So the swap type, you might not be able to see it now, but you can go and have a look at it on your terminal. The swap type, in this case, it's points, long swap, and then the short swap in terms of points for one lot size. So it talks about the volume as well. But it tells you in the swap rates, Mondays, Tuesdays, Thursdays, and Fridays is 1. Wednesdays is triple. So in points, for a one lot size, it's equal to 10.8 points, which is equal to 1 pip, 0.08. So that's not all that much in terms of swaps. So you can go and have a look at that information. I am gone. I have disappeared. Why am I gone? Remy. There we go. It seems as though we have a little bit. I wonder if, can people hear me? There we go. I'm on. I just noticed now the time. We have reached the end of the stream. I just wanted to say thank you to everybody that was here today, that came to spend some time with us here on Christmas Day. I'm very thankful to all of you for being here. Thank you very much for the questions. I see that there's 2 questions. I'm going to write these questions down, and then on Monday I will look at these. One is from Mubashir, and the other one is from Shami Muhammad. So when is the Futures Challenges being introduced? It's going to be soon. You just need to be patient for that one. Mubashir, I'm going to keep yours in mind for Monday. Everybody else, if you haven't already, drop a like. If you haven't already subscribed, please subscribe. And for everybody else, we've only got a few more days left for the 2.5K account discount, which is 50% discount on the 2.5K. You can have 2 of them. Please go and get yourself one of those accounts. You can scale it all the way up to 500,000. It is genuinely worth every dollar, that account. And with that just being said, a happy Christmas to those of you who celebrate Christmas. For those of you who don't, I hope that you have a very festive end of year. And then I will see you guys all on Monday. Everybody have a great day. Cheers.